You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and thank you for joining us on the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. And here we are on the long weekend, because realtors don't sleep, not even on long weekends, to talk about what's been going on in our local market. I hope you guys are excited. We got a great lineup. We're going to talk about what the media has to say happened looking at the stats from August 2020. Go back if you haven't heard it on Friday. And I talked about what I saw come directly from the press release of TREB and what I kind of at the very beginning looked at as an investor. I want to know what's going on in our market. And I talked a little bit about what I was seeing going on. Well, the news is just flooded with different titles that come from all the major news sources, and I actually went a little bit of a change of pace. I went through all of them, and I want to pull for you the main golden nuggets that came from them as we try and fully understand what happened in our marketplace in August 2020. So we're going to talk a little bit about that, and out of that conversation comes these two ideas. Number one being our mortgage deferrals going to sideswipe our market as we kind of round into Q4. And then we're going to discuss a little bit about unemployment, because those numbers came out across Canada. Will that affect real estate in the winter months? I hope you guys are having a wonderful Labor Day weekend. I know we are. In fact, today, which is Saturday, is my youngest daughter's Hannah's 3-month birthday. So we're celebrating labor. Oh, we sure are. During the beautiful process of childbirth, my wife was screaming her head off. And here we are to celebrate. But you know me, I'm a supportive husband, so I just asked, "What's wrong?" And she screams, "The contractions are killing me!" But you know, I can take the criticism, so I was like, "I am sorry, honey. What is wrong?" That's a contractions joke. Probably don't get it. But we're gonna move on. I mean, it wasn't a good, it's not a fun scene for those of you who haven't had kids. I mean, and it doesn't help. My doctor was a complete idiot. He was like, "How about a epidural anesthesia?" What a moron. Thank you, but we already have a name picked. All right, let's move right along. Let's start talking about real estate. We like to have some fun. We like to keep it light. Make sure you hit the subscribe button, leave a like button. If you have any topics you want us to cover, we're going to continue to do that. And thanks again for all of you who have sent us messages. I know I'm super busy. I've actually spent yesterday playing a ton of catch up, so hopefully I've gotten back to everybody that had reached out. And I'm sure as more stats come out and people are seeing the various opportunities going to hit us through the winter months, we're going to get more, and that's why we're here. But today I want to talk specifically, I took a little bit of a change of pace. Usually I like to focus on one article, but the first topic today is going to cover, in this case, we got 7 articles. And it's really hyperspeed catching up on what the media has to say happened in August 2020. Because yes, they're all looking at the same press release, but they all come up from different angles. And this sets a precedent for what the consumer believes is happening in our market today. Well, here's the articles we're covering. We're covering the Toronto Star, CP24, Yahoo Finance, CTV Toronto, BNN, Global News, and my favorite article, Zoocasa. And I want to give you guys the scoop and all the things beyond what we already talked about, and just to get everyone caught up to speed on what the highlight news is. If you missed it, welcome to the party. Go back and listen to my podcast on Friday. But here's what happened, guys. We saw a price increase in the GTA by 20% year over year. Significant price increases, and that is all over the news. Definitely you've heard that. But what was also important to note was there were substantial differences in the gains. When we look at the detached property market, they were up in price 19.9% to almost 1.2 million. Meanwhile, the condo market lagged, with sales up 10.9% and prices only advancing 9.5%. There is so much more behind that, which we're going to cover in just a second, but there's a clear difference. If you missed the update from the press release directly, go back, check that out on Friday. And today we're going to move right along, and we're going to talk about what extra points were added, what points of analysis. We have to really look at what everyone is saying to fully understand as investors what is going on and what happens next. Well, before I do that, I have to say that I was wrong once. I was wrong that I was wrong, which means I was right. Because a few days ago I said, you know what, I think sales are going to be, I thought sales was going to come down from into August. I honestly thought that because we were getting that from listeners. And then I reported on Friday that wasn't the case. Well, I was wrong. That, in fact, I was actually the first time I was right. So I was wrong in that I was wrong, which means I was right. I was right the first time. Because if I were to kind of summarize everything going on right now, Toronto sales, the big title that everyone sees is that sales in Treb are up 40% year over year. That's the big number. It's this behind the scenes number. I'm trying to figure out what was the top of the year. And my point initially was that July would be the top. And then I thought, I don't know how I thought this, but somewhere it came out that I thought August actually was higher, but I was right the first time. I was wrong when I was wrong. And apparently it's actually down because I went and I did a double check just to make sure we have the accurate stats. July 2020, the number of sales is 11,000, and in August it was around 10,000. And we actually, if you run the numbers, about 306 actually is the exact number, 306 sales. It went down into August. So in fact, prices are up, but sales month over month are down. And so I was right initially in saying that July was the peak month. And so here we go. We're starting to trend downwards, and I think that trend will continue into the winter months. So as I'm jumping into some of these news, here are some of the highlights. Global News has something of value to add. They say this: condos are increasingly hitting the market as people move towards low-rise communities. Sales of detached homes rose 50.6%, semi climbed 66.8%, and townhomes gained 45.8%. So depending on which housing type you're invested in, there's some fun facts for you. Meanwhile, condo apartments were slower at 10.9%. And they say this is Mercer from Treb, Jason Mercer, quote, with growth in condominium apartment listings well outstripping condo sales growth. So there's a little bit of a fun fact coming from Global News. CP24 adds further value, which we're going to talk to, and this is going to set the tone for the rest of this podcast. You ready? Okay. This is what they say. Going into fall, market watchers are eyeing how mortgage deferral rates, that's the first thing, and the end of other government income supports, that's the second thing, will impact the real estate market according to the separate report on interest rates released by Finder.com on Thursday. They asked a senior economist, Sri, this guy has an unbelievably long name. I'm not even going to try. I'm not even going to spell it for you. It's just long, right? So this senior economist from TD from this Finders.com report said, quote, a partial labor market recovery and ending market deferrals could increase housing supply later this year, potentially putting downward pressure on prices. All right. So the highest economists, the senior economists of the largest banks in our country are pointing in this article to two factors that will single-handedly put downward pressure on prices, if in fact there's downward pressure. And what are those? Number one, mortgage deferrals. And number two, in combination with income supports, is this idea of employment. Do we get our jobs back? We need our jobs back. Anybody, if you can work, work. Canadians, workers that are here from all around the world, put them all to work and get our economy rolling. Speaking of which, you know what they call a group of Mexicans doing work? Manual labor. I don't think that's racist. I think it's funny, but I'm sorry. I'm sorry, guys. Sometimes I'm offended, get myself in trouble. Really do. I offend all people equally. This is an equal opportunity offense. All right, here we go. We're going to move on. This idea of tenants. This comes from Yahoo Finance article. Here's what they say. This idea of this tenant challenge. I love this quote. It's mostly investors that are putting the condos on the market because they are not able to get renters. Tenants aren't able to pay the rent. They are the ones that have lost their jobs. So I love that point. I think that's more legitimate as we kind of go through this idea of renters. And we've talked about that in many podcasts. We're not doing that today. But at least finally, if there is any silver lining here, is we're at least allowed to evict unpaying tenants. Again, finally, right? Like we're out here preventing moms from being able to artificially induce labor. And they're all like, no child should have to start its life with an eviction notice. No evictions for anybody. All right. So that article, and also another good point here when they talk about 2019 sales, which is so fascinating. In spite of the record-setting sales in July and August, Treb said year-to-date sales have not caught up to where they were this time last year, given how significant the drop in sales was during the spring. Only sales of detached homes have surpassed the 2019 levels so far this year. Perfect timing, because we were just talking about how in cottage country, they have well exceeded it. Even not on waterfront properties are actually exceeded. And the ones on waterfront property have far exceeded the sales to date from 2019. However, even with the stand-up year we had and the stand-up month in August, we still haven't caught up fully. And there are some people that say there might still be some gas in the tank. If that's the case, that's an argument for that for sure. But my favorite article, as I said at the beginning, was Zoocasa. Great value they're adding, breaking it down by regions, and a wonderful piece of value I can add to the overall content, which is the August update. Ready here? Okay, first thing to point out is Toronto is the best. We're the best, guys. We are the best. Don't forget it. By dollar amount, the average detached house price in the city of Toronto experienced the steepest rise by dollar amount, followed by Halton. So Toronto was up 21%, reaching $1.5 million for a detached home. Whereas, and actually this was an astounding, from a number of sales perspective, astounding 64% jump, guys. 64%. Stick that in your vaporizer and vaporize it. Whereas Halton did very good too. Right? They were up 19%, which is an all-time monthly high for them. If you're out in Durham, you also did great, right? Yeah, that was Ajax, Oshawa, Pickering, Whitby. Collectively, were up 22%. And this is talking about the average price, by the way. The average price, if we look at Peel, the average price is up 18%. Not too shabby. Not too shabby. Just really, are you making that kind of bank? I mean, are you invested is the next question. And finally, York Region, 15%. Which is like, oh, you only rose by 15%, right? Putting your detached home values at $1.3 million. I mean, modest increases out there in York. But the big story, also from Zoocasa, is condos are getting spanked. Naughty, naughty. Within the city of Toronto specifically, where more than 2/3 of GTA condo apartment transactions take place. So this is just pointing to the fact that, now recognize the city of Toronto got hurt even more, but they're saying it's such a significant part of the overall condo market, GTA. Great point. Condo apartment sales grew 9% annually. But listen to these. New listings, all the while, substantially higher year over year at 117% increase. That's crazy. That's an all-time monthly high. And as we mentioned before, and here's some more specifics on the condo segment, is talking about the SNLR, the sales to new listings ratio. You want that number if you have a property to be high. If you want that prices to stay flat or go down, you want it to be low, right? And so anywhere from 40 to 60, just as a recap, is your balanced market. If it's under 40, it's a buyer's market, which means prices can come down. If it's over 60, it means it's a seller's market and prices will naturally go up. Well, last year in the condo space, we sat ourselves in a healthy 74% SNLR, which is definitely a seller's market. Well, where are we today? In a matter of 1 year, the new SNLR for condos in Toronto, making up 2/3 of all condos, am I waiting too long yet, is 37%. Boom. That's how you jump from a seller's to a buyer's market in one segment in 1 year. Spank, spank. We have an emergency. Call the paramedics. Please help. My wife is in labor. Is this her first child? No, this is her husband. Okay, moving on. I'm having fun. I mean, if you don't like the jokes, it's no big deal. It's no big deal. Just take the content. Take the content. I got the numbers here. I mean, they're very fascinating. If I were to look overall, just to kind of give you the synopsis, again, from Zoocasa, a great article. If you want one article to go in and dive deeper into, this is the one to do it. And this is there's a lot of them. There is a lot of them. When we look in the GTA, we see detached homes up 20%. We see semis up 18%. This is the price, by the way. And townhomes up 14%. Condos up 10%. When we look at home sales, meanwhile, for GTA, detached up 50%. Semis, 66%. Townhomes, 38%. Townhomes, condo apartments up 11%. And in Toronto, it's very similar. We see the semi-detached as a number of sales has gone up quite substantially. But we see, generally speaking, it looks like the semis and the detached homes seem to be outperforming as far as price, the condo townhomes and the condo apartments. So that's that's the scoop. That's the scoop. That is what all the major articles have to say about what happened in August. Well, let's move forward. Remember my point? The senior economists are saying the most important thing to watch right now is mortgage deferrals and employment. Well, we're going to do just that. You ready? We're going to come at it hard. We're going to use the most aggressive, most anti-real estate publication I know of, my friends over at Better Dwelling, when we talk about mortgage deferrals. Here we go. Will they sideswipe your market? Well, this article says Canada's big six banks report over 500,000 mortgages on payment deferral. For those of you who've been tracking with a while, you know it's been 750,000 originally that was signed up, so 750. That tells me the majority are still there. Well, let's go further into the article and see what is good. Canada's banks are starting to see mortgage payment deferrals expire. The households resume payments. And Canada's big six banks reported in Q3 earnings last week, which ended on July 31st. This is the first big point that I want to say here. When I think of Q3, I ain't thinking of July as the last Q3 month. So if that's the case, what we need to first appreciate before we can dive deeper in this article is that their quarters that they're running on are not annual. They're not January, February, March. In fact, Q2 would have been March, April, May. Q3 would have been, I guess what would that be? Hang on. Backtrack. Anyways, Q3 ended in July. So that would have been May, June, July. So we would have had February, March, April would have been Q2. Not ending in August, which you would kind of assume. August, September, October, November. Anyways, we should be later in the year, but we're not. The point here, shut up and get to the point. The point here is, although they're saying Q3, what they're saying is that we're looking at stats that ended effective July 31st, okay? So all of the deferrals that we're going to talk about, this is as of that day, and as you guys know, August is going to be key months as we start to see these deferrals come to an end. Later is more important because if you're getting a deferral, why would you leave? Like, why would you leave if you're doing it, even if you're trying to take advantage of this program? So I want to hear what are the big points that Better Dwelling has to say on why mortgage deferrals is a problem. Here's the article. There were 510,500 mortgages on payment deferrals at the big six banks at the end of Q3, which is down from the previous quarter. Again, these quarter things are useless at this point. 17.5%. The mortgages are worth 136 billion, which is down 15% from Q2. Again, not in line with what you're thinking Q2, but from the last 3 months before. So we are seeing and I love how they kind of break it up, but there's kind of like the stepping stone. Like we're seeing the value happening quarter by quarter instead of monthly, which I think is more important. And it's instead of future, which I think is also more important on what the banks have to say. But like, would it not make more sense to ask what the banks think instead of what they've seen in the past on where it's going? I think that makes more sense. But here's what they say. How the number drops is important to understand since not everyone took a deferral because they needed it. So the first point that I hear even from Better Dwelling is that the number only dropped because people didn't need it anyways. That's what they're saying. At least that's what I'm hearing here. So again, it seems like it's pulling a punch. Like you're pulling your punch. That's not a very strong argument. Like your number only dropped because they didn't need it anyways. And so is the conclusion therefore that everyone else still needs it? Like is that the argument? I don't hear them saying that. And they're not going to say that because the banks aren't saying that. So when we look at it, they say in terms of the account numbers, all but one bank is seeing fewer mortgage deferrals. RBC sits at the highest. They're down though from quarter to quarter, 30%. TD down 15%. Again, quarter to quarter, not including August, not including future, just historical. The only bank, as we've mentioned before, that has really taken a hit for whatever reason is Scotiabank, and they're actually up in mortgage deferrals at 5%. Maybe they're taking on the risks of the world. I don't know. I'm not sure. Or maybe they're just, I know Scotiabank has gotten a lot of, I've heard good things about Scotiabank, so I wonder if maybe they're making it too easy to apply for deferrals. I don't know. But Scotiabank is seeing an increase while everyone else is seeing decreases, and that's a little odd, and I don't know why that is. But overall, we are seeing declines. And when we look at the number of payment deferrals, here's a fun fact. Obviously, the dollar value is going down substantially. Like for RBC, it's down 23%. For CIBC, it's down 6%, which is the lowest. Or sorry, they're second. So RBC is significantly down. But here's a fun one. BMO. This says they're the only one to see an increase to 17.25 billion on deferrals, which is up 0.52% from the previous quarter. The increase is relatively minor, but considering BMO is seeing fewer accounts on deferrals, this means bigger mortgages were asking for relief. Isn't that fascinating? So although they're seeing deferral numbers going down, the dollar value being borrowed is going up, which means maybe some of the higher net worth people are taking advantage. I don't know what that is, but it's fascinating. And then this is what they say. The declines in mortgages on payment deferrals is expected and doesn't quite tell us as much as people likely hope. So their point number 2 is it's too messy to understand. And we don't know. We don't get it. And that's fine. I get it. But you just made a whole article talking about how it was a bad thing. And then you made points that kind of said either you don't know or it wasn't so much a bad thing in the first place based on the declines we've seen. Well, let me complete the painting of this mortgage deferral picture for you. They are pulling their punches. And why is that? Well, it's because the deferral cliff, if I were to be honest with you, isn't, as we've been saying for a long time now, it's not that noteworthy. It really isn't, guys. All the major banks, with the exception of Scotia, have dropped their provisions for losses by, I've seen as much as up to 60%. And we've talked about that on our podcast. And that is the future expectation from the bank. So yes, although they're down maybe from a 3-month over 3-month basis by 15 to 30%, well, if you look to what their expectation is for future, it's over 60%. And that to me is more important. And that to me is why I am not as concerned, although the economists are, that could be a problem. I don't see that as a problem. I could be wrong. If you guys have other thoughts or if I'm missing something, I mean, you know, I've been talking about this for a while. Feel free to pipe in, guys. Add it in the comments and let me know. Okay, before we get into employment, before we go there, we got to wind this back a little bit. We're talking a lot of numbers, so we got to bring this back before we start getting into employment numbers. We're going to do some hot topics. All right. Here's some fun facts. So I saw an article of Toronto.ca. They have a interactive map now for COVID-19, which is kind of fascinating. I was trying to play around on it and look, and it looks like it's by area. You can play around and jump on that. I've seen that in the news as well, but it's important, right? We want to know where the cases are. We all know, don't go to Brampton. Don't go to those Peel region out there. All those parties. Whatever they be doing, that's the dark side, right? So don't go out to Peel because they got a lot of cases. And if the idea is to avoid cases, then having a map like this in the city is actually a wonderful, fantastic, beautiful, amazing, spectacular thing that you can go check out online. And we all know we don't want to get people getting sick, right? We don't want nobody missing work, because if someone misses work, then like if your doula is not available on delivery day, ain't nobody want no midwife crisis. All right, another fun fact. That apparently 1/3 of Toronto elementary students are learning from home. As we kind of round into the school season, it'll be interesting to see how many kids actually stay home from school. And meanwhile, it don't matter. Teachers out here making $100,000 a year. Hard work never killed anybody, but why take a chance? Hey, I ain't tripping. Go get that guap. You guys do what you got to do, right? I'm overpaid too, but we're worth it. All right, and another hot topic I'm seeing right now is this idea of consumer debt. And this kind of balance that's coming. I think this is a BNN Bloomberg article. Mortgage balance weighed on Canadian credit the most, with increased refinancing activity and higher average home prices pushing the average debt per person to $73,000, which is 2.2% higher compared to the second quarter of last year. So we have an increase in mortgage debt. And now a lot of that is so we've seen a lot of this stuff. We've seen a lot. What is more interesting in my book, other than the mortgage stuff, because I think that we've kind of seen how that's played out very specifically, but the confidence in consumer spending is really what I wanted to grab on from this article. They say this: credit products began to show green shoots of a bounce back, with credit card spending starting to rise in June. Card spending for those not using a payment deferral on their credit card was effectively back to pre-COVID levels. So if you didn't take the deferral, your spending is back to where it was by the end of the quarter, back to pre-COVID. Many Canadians have resorted to credit payment deferrals to help ease the financial stress. This is being popular among Canadians aged 35 to 44, according to Equifax, so a very specific group that's using it, where 15.1% have used some kind of deferral compared to 57% of seniors. So we've got a big chunk of you guys between 35 to 44 using it. Meanwhile, seniors, they're not using that deferrals. And while this is an interesting fact too, I love this stuff. While the 90-plus day delinquency rate for non-mortgage debt sits at 1.24%, which is up 10.6%. We've heard about this from articles like Better Dwelling, right? This idea of delinquencies are up with from the second quarter of 2019. Equifax said this is a continued trend from last year and doesn't measure the true impact of the pandemic. So don't just look year over year. We got to look at this as an overall trend that delinquencies are rising in Canada, even pre-COVID. And then they say this: 1 in 5 people utilizing deferred payments were already financially stressed prior to the start of the pandemic. So as a wrap up to the whole deferral thing, They're saying 1 in 5 were already stressed that are on the deferral. So what that tells me, as a person that reads too far into things, is in other words, 4 out of 5 of the deferrals are non-issues. Right? That's what I hear. I jump to conclusions, right? I be hopping to conclusions way too quick sometimes. Okay, let's move on. You guys ready to talk about employment? If employment is such a big factor as we round into real estate months here in the winter, should we be careful? Should we be scared? Right? And it wouldn't be Labor Day weekend if we weren't talking about jobs. You know what union members and trickle-down economics have in common? They don't work. Or in this case, they do. Because jobs are coming back quickly. Not according to CBC, but also according to CBC. Because here's what their article says, and here's how they spin it. And you got to read between the lines, guys. You really do. Sometimes you got to overread between the lines. Now, CBC.ca has this article, and they're talking about the jobs report that's come out. Canada added 246,000 jobs in August, but employment still $1 million short of pre-COVID levels. So the subheading is 4th month in a row of strong gains, not enough to fully offset losses from the previous 2. That's a negative start, right? That's a very negative start. It's a bad way to start life. Canada's economy added 246,000 jobs in August. It pushed the jobless rate down 0.7 percentage points to 10.2%. Again, it sounds high, right? Like 10%. That is high. I mean, it is high. Statistics Canada reported Friday that most of the new jobs recorded in the month were full-time work. The figure was in line with economists had been expecting. Now, let's just correct that. It's not new jobs. It's the old jobs coming back, hopefully. I mean, there might be some new jobs in there, but generally speaking, not. Generally speaking, it's a rebound. August numbers brings the 4th month total of new jobs to almost 2 million since May, but because of the plunge in March and April, Canada still has $1.1 million fewer paid workers than it did in February before COVID-19. Okay, so let's jump into some of these numbers. Job losses aren't the way that the pandemic is impacting the job market. They're not the only way. Many more people are finding themselves working less than they normally do. So they also say that 713,000 people who still had jobs during the month were what the agency calls COVID-related absences from work. That brings the number of workers, if you really counted it, affected by the pandemic to 1.8 million. And in April, that figure, just to kind of wrap this all up, was 5.5 million. So we sit right now at 1.8. We were at 5.5. With 3 million lost jobs and 2.5 million people working less. That sounds like progress to me. Unless I'm missing something. $5.5 million affected by 5.5 million people affected by COVID, now affecting only 1.8 million people. Well, okay. But then they said that the number peaked. They're talking about this idea of temporary layoffs. Temporary layoffs, they say, declined to 230,000 last month. So they're saying that could still be a problem. But it peaked in April at 1.2. So we dropped in the temporary layoff sphere from 1.2 million to 230,000. That sounds like progress to me. I mean, spin it how you will. That sounds like a substantial amount of them are back to work. According to Catherine Judge, an economist with CIBC, they say this. One thing that happens in a recession is that people look for new jobs and discover there is a skill mismatch, she said in an interview. That's one of the reasons why she expects the jobless rate will be at least 3 points higher than it was before COVID-19, at least into 2021. And this, I think, is the best approach. Our friend, once again, from TD, making a name for himself that I can't read. Okay, I'm going to go for it. I'm going to go for it. Brace for impact. Sri Thanabalasingham. There you go. Make of that name what you will. He said that while the numbers on the whole were encouraging, they underline just how slow the recovery is likely to be from here on out. I think that's a more honest approach than even the article is giving. I think it's an honest approach to say we've rebounded very well, but from here on out, it's going to be slow. And he says this, it will be difficult for the labor market to maintain the current pace of job gains. The gains are too big. They're too big to be sustainable. Further, future employment improvements will be likely tied to the path of the virus. This final third could be the longest stretch in the long road to recovery for Canada's labor market. That's honest. And if we were to be honest, we could say there is a vast number of Canadians that are still jobless, and that final recovery will be difficult. But to ignore the success that we've had in the rebounding in the job market, I think would be a bit negligent. And that's why I don't like the negative approach. Let's be optimistic. Let's be le funny, right? A big reason why the next few months could be harder for the job market is very Canadian, and it is the weather. They say the hardest hit segment is the restaurant group, and they have this pretty little chart talking about job recoveries across different demographic groups. Well, let me break it down for you guys. Men between 25 to 54, women between 25 to 54, both sexes 55 years and older. They all, from their 100% peak back in February, have almost all been floating around the 95 percentile. They're all back to work. They're back to work. Well, then why is the number still a third that's not back to work? Well, youth between the ages of 15 to 24, from their 100% height in February, they look like they sit around 85%. So clearly the hardest hit group is the youth. They're the young people. And are people out there buying homes right now before the age of 24? I mean, I think I'm an exception to that rule. Most people aren't in that category, and that's fine. I'm not 24 anymore. But I'm just saying, affordability is a challenge for people, and good luck getting a property before 24. There are people, don't get me wrong, there are people that can do it. But generally speaking, if I were to think about it, will this cause a problem? Will this still not full recovery of employment cause a problem for the real estate market? Nah, it won't. It won't. Right? That's my conclusion. My conclusion is we've seen success in our market this month, and the two biggest concerns that are being named today from the top economists of this idea of a deferral cliff and this idea of employment, well, if that's what we got to worry about, we don't have that much to worry about. So let's start focusing on the real problem. What's the real problem? We're not going to get into it today, but I believe the real problem is a couple things. One is the supply crisis we have here. We need more missing middle properties. We need more homes. That's going to be the real issue with price. That is the story. That is the underlying story that's not told in any of these major news articles. And then also low immigration. We need to see those numbers come up. But that's all for another day. We're going to leave it there. We're going to go outside. We're going to go have some fun for Labor Day. Happy birthday to all of you this Monday. Or Labor Day. Labor Day. Same thing. Whatever the kids are out there calling it these days. And I apologize once again. I'm so apologetic. My cheesy jokes, they're so bad. Yeah, I mean, imagine, right? My wife, when she was in labor, that's all I had to keep her mind off the pain. Like, that's all I got. But like you, she definitely wasn't amused, right? I think it was the delivery. I got to work on that. All right, guys, I'm going to leave it there, and I will see you next time. Have yourself a fantastic long weekend. Take care and keep it real.